Very good morning, everyone. Hope you guys have had an amazing week. It's been a quite eventful week. A lot has been going on, as you all know. It began in style, and yeah, the events have really been shaping much of how the week has been running around. So, other than that, it's a non-farm payroll day, unemployment day, or as Bloomberg likes saying, it's jobs day. So, we are going to break down and see what you can expect, where the opportunities lie. Should we pay attention to the non-farm payrolls, or should we pay attention more to the war escalations? But as usual, do not forget that FXPesa proudly sponsors the market snapshot, and it's here to help you get some more insights and focus on where you can be able to get some more viable trade opportunities through that day. They do not just do that, they also go ahead to offer you free education. That means if you're interested in learning how to trade, learning more about the financial markets, we do have classes that are tailor-made based on what level of trading you are on. If you're a beginner, we do have an 8 p.m. session. If you're an intermediate trader, we do have a 10 a.m. session for intermediates where we learn strategies. And of course, we do have a lot of other things that we do offer, like seminars. We did have an amazing seminar on the 28th of February in Dar es Salaam, and we do have very many coming up for you guys to help you become better traders or to learn how to figure out the market. Other than that, we can get down, and the first thing you always want to do whenever you come into the markets as a retail trader is to look and see where the volatility is going to be in terms of what news events may be in there during the day that could definitely kind of affect your trades, change the direction of the market, cause some volatility that may make you uncomfortable. You know, when it comes to things like the fundamental side of the markets, the impact can be very, very big and becomes a bit tricky, right? So as a retail trader, you want to be safe. On top of risk management, you want to know what time in the day you are most likely going to expect some kind of volatility so that you can either stay out of the market, manage your trades better, or even know what pairs not to look at and what pairs to look out for. So with that being said, you can now go down. Shout out to the guys who are streaming today from Instagram, as well as those on YouTube. You can always drop in your questions and we shall see what you are looking at the end of the day. So other than that, let's see. Okay. So I'll start with Forex Factory as usual. Now this is the most popular one that you tend to use when we are looking for news events that are coming in through that day. So let me just reload my Forex Factory page. And usually you get some bit of headlines from the political side always. So you can see here we always have a news stroke hot story. Senior White House official, Treasury expected to announce measure to combat rising energy costs. So that's something to do with inflation as well. The impact of the Middle East conflict on European economy. This is very important. We're going to speak about it in a bit, but I want to speak about this from a technical perspective while we are looking at some European pairs like the pound and the euro. So let's get down to our calendar now. This is where the heat of the day is, or where the day is going to become a bit more tricky, right? When it comes to this part exactly. Just a second. All right, so now when it comes to this, we do have average hourly earnings, we do have the core retail sales, we do have the non-farm employment change, and the retail sales month over month, then the unemployment rate. Now this is where we have the big moves coming in during the day in terms of economic data coming in from the US economy, particularly. So what we want to pay attention to more will be average hourly earnings. We can see the forecast says 0.3% and the previous was 0.4%. So with average hourly earnings, usually what happens that when they decrease, it means people are earning relatively less. They're earning relatively less per hour in terms of like minimum wage, for example, right? On the jobs created, people are earning 0.3% based on the forecast. Last month, they were getting 0.4%. Now that's average hourly earnings. You want to pay much attention to this because this will show you if you can expect an inflation rise or a decrease in inflation. Basically, that's very, very important because it shows you if people are earning more money, that means they are going to be spending more money. And when there is so much money in circulation, then most definitely you expect inflation to do what? To increase, because people are having more disposable income. Now that's what's so important when it comes to average hourly earnings. Now we have the non-farm employment change. Now these are basically the number of jobs that have been added in a particular economy within a period of 1 month, excluding the farming sector. That means except the farming sector, we're looking at how many jobs have been added to that economy in that particular period of time. Now that's what they call the non-farm employment change, or what they call the unemployment numbers, the jobs data, right? Then of course from there we shall come down to the unemployment rate. So as you can see here, the previous was 4.3. We expect it to be pretty much around the same in terms of this reading. So you're going to pay more attention to this if this change could happen. Then the non-farm employment change, the forecast is 58K. That means they are forecasting that 58,000 jobs have been added to the economy in the previous month, and compared to the more than 30K jobs that were added the month before that. Now this will mean that less jobs have been added, and this will usually be bad for the dollar. Now, one thing about this forecast is that even last time, as we saw, the forecast was really less, but this time we saw a 130K number. Now, this is a trend we have seen. This is a trend we have seen throughout last year, coming into this year, that a lot of times the forecast is way less compared to the figure that comes out, especially ever since Trump took office. So it's something you don't want to rely on a lot when it comes in those regards. Now let's look at some articles that may be moving the markets as well. As you may know, coming into this week, we did see a war escalation between, of course, Iran, Israel, and the US. That was pretty much growing a lot. I believe last week on Monday, we had a headline, or on my title, we spoke about growing tensions. Before the war even started, we spoke about growing tensions between the US and Israel. And after 5 days going into the weekend, we were able to see that those tensions develop into a full-scale war. Right? They're now bombing themselves left, right, and center, and we have seen it take a toll on the market throughout this week, as you can see. So, of course, the first major thing that has been affected is oil, both crude and Brent oil. So, crude oil, we're speaking about West Texas Industries, or oil from the US, and we are seeing it trading at $81.228 per barrel. And as of today, it's up 0.29%. Brent oil, this is UK oil, we are seeing it trading at $85.835 per barrel, which means that an increase, of course. We all know that the Strait of Hormuz has been closed at the moment because of war risks that are coming in between the bombs flying over the Middle East. And most likely, you're going to expect that when a major channel of transportation is closed, it's going to create low supply towards Europe, right? Gas and oil and all these things. Automatically, it's going to take an effect not only on the European economy, but also the European currencies. Now, as a trader or a retail trader, that's where I want to pay attention to. Yes, the economy will weaken, but the currency will also take a hit. So by default, that means if the European countries are struggling, there is no way you're expecting their currencies to be strong. Now, that in itself is really a strong vision of where you want to be trading. You want to be shorting the pound, you want to be shorting the euro, you want to be shorting the Switzerland franc, because these are some of the major European countries, or currencies we tend to trade a lot, right? And right now the economies are going to weaken because, by all means, whether they want it or not, less oil is being transported to European nations. That supply has been reduced by a very great magnitude. I mean, we speak about a fifth of the world's global oil supply are going through the Strait of Hormuz. Now imagine what kind of hit those European countries are taking right now. That means in the short-term future, we are expecting inflation and all these other aspects. So that means it's going to be very tricky for them to actually sustain the economies. Now that in itself shows you that from this understanding, I'm going to trade pairs like GU, EU, CHF pairs, but I'm going to look at weak British pairs, right? Good morning, Lugayizi, Alexavier, how are you doing? So that's something you want to look out for. So as the dollar set for a strong weekly gain, the dollar index steadied about 99 on Friday and was poised to gain more than 1% this week, supported by safe haven demand as the escalating Middle East conflict and raising oil prices unsettled. These are now financial markets as well. Gold set for weekly lows, South Korean current accounts are so okay. We're going to speak about the dollar strength and the gold weakness in a bit as we go on. Another thing I'd like to look out for now is going to be what we call MATAF. Now, MATAF is a platform where you can get different aspects as well. But I like coming to this to look at what they call currency indexes. You can look at correlations as well. They are a very great tool for you when you're going to trade and you're looking for what currency pairs you want to trade. This becomes very tricky. We're having a war going on. Probably you're trading gold. All through the weekend when the war started, you probably had people speaking about buy gold, buy gold, buy gold. But gold has refused to buy. It has just refused to buy. And you're probably wondering why, right? And now you're looking for what currency pairs you're going to look out for next. So you can always use this currency correlation table, right? So you can choose a time frame, let's say the hourly time frame, and you're looking at what pairs are correlating a lot, right? So you can see EURUSD, GBPUSD have an 83% correlation. You can just look for those high correlation numbers, right? We can see AUDUSD and EURUSD have a strong correlation as well. So there's a lot of figures here. You can always just look at how best these are correlated. That means if you're buying GU, you want to buy EURUSD. If you're buying EURUSD, you want to buy AUDUSD. That's a currency correlation. But let's look at the currency indexes. So you come here trading tools, and let's look at the currency indexes and look at the European currency indexes and see which ones are trying to gain, which ones are still weak. Then that can set precedent for what pairs we want to focus on through today. Of course, we have the non-farm payrolls coming out later in the day, and the forecast is about 58K compared to 130K that came out last month. So we did see this coming. 58,000 jobs are being predicted. Now, of course, we have seen the forecast. The next thing we want to do is to see if we can have a market structure that aligns with our forecast, or which is the worst case scenario. So here you can see that we have a pair of currencies under the currency indexes. Where are they? Currency index over here. In the meantime, if you have any questions, you can drop them down in the comment section, both on YouTube and Instagram, in the chat. Then we'll be able to get to them and see how best we can answer those questions. So just a minute, I'm just trying to load this up. The network is a little bit slow. My apologies, but it's a bit slow. Hi, Robert Cavalli, how are you doing? How's the week been on your side? So here, as you can see, this is now the dollar, but I'll focus on at least 2 European pairs. Usually when we're, okay, let's look at the pound first. Let us look at the pound. Expand this on its own, right? If you see a weakening pound, then you know that you're going to sell pairs like GBPUSD if the dollar is strengthening. So it's just more about the correlations. So if I want to trade, for example, if I want to trade like let's say GBPJPY, I can come here and independently look at the pound, then independently look at the yen, right? And I see which one is stronger based on the technical analysis. Then I see which one is weaker and take a trade based on which one I find gives me a much better direction or gives me a nice correlation, right? So when you look at the pound on the 4-hour time frame, as you can clearly see, this is pretty straight. It has been a downtrend on a 4-hour time frame, of course, the whole week. So you can just see this, and right now it is hovering right below a resistance level, and the wall has no signs of slowing down yet, which means European currencies or pairs like the pound are still looking at how would I call it, at being weak, because they're not getting that nice oil supply. So we have this first level here you can look at, but just in case this level doesn't give us a nice confirmation to sell, we do have another one slightly above that, another strong resistance level that I want to mark out. So you can see how significant these levels are. You see that? So you have these two zones. So for as long as price is below these two zones, pretty much still going to be looking for once this reaches one of these two zones. Okay, this is basically just what we can look out on the pound. Let's look at another European pair, for example, and just see. So we're seeing a weak pound. We're seeing a weak pound. Remember, why I'm focusing on pairs like the pound right now is because we have non-farm payrolls coming out, and this is one of the pairs that are going to be affected a lot. So you want to see if you can be on the bright side of that. I mean, volatility comes with opportunities, but it's important to align them with the technical analysis as well. Right, so I see a question here from Irene Minor, 5094. All right, so she says, which website or app are you using to look at correlation? It's called mataf.net. Mataf.net. So when you look at the CHF did weaken initially, but it's trying to gain back because right now investors are looking for what you call safe havens, right? Where can they protect their money? Now, when you see people like in Dubai getting hit, initially CHF becomes weak, but then the beauty about the Switzerland franc is the fact that Switzerland has the best banking policies, right? They have the best banking policies, so we can expect some people to start moving their money to these banks here to save their money in Switzerland because their banking policies. When you're seeing interest in the Middle East, we know that there is so much money in the Middle East, right? So if this tension is spreading along all these rich people, all these investors in the Middle East, they are going to want to safekeep their money, right? So where will they run to? The country or the economy with the best banking policies. It's why initially, before the war had spread that much, we saw this pair consolidating. But the more other countries are getting affected, we saw dollar getting bombed yesterday. That shows that more countries in the Middle East are at risk of being bombed by Iran. So investors start trying to put their money in safe places, apart from the dollar being a safe haven at the current time. As we are speaking, the dollar is a safe haven currency for a couple of reasons we are going to talk about. I'll get to my MT5 in a bit. Then we can now analyze pairs. So I'll just show you what you can do with currency correlations, looking at currency indexes, and then how you can be able to take advantage of them. So now let's go down and do some analysis. Let me share my MT5 chart in a bit. So you can drop down the currency pairs you'd like us to look at. The chart, I've seen some requests, of course, we're going to look at all of them. All right, the website was mataf.net. Do you have a video explaining your strategy? I have a video here that explains how I approach my strategy. It's just market structure and pure price action, by the way, and then supply and demand. It's the only thing that I do besides price action is supply and demand, but it's just pure price action. So let's get down and see where the opportunities lay. So now, if the figure from the non-farm payrolls today comes out above 58,000 jobs being added in the previous month of Feb, that will be good for the dollar, right? That means shall we expect the dollar to do what? To continue buying to the upside. Now, of course, ever since the war started, we have seen the dollar actually strongly recovering, right? Because we all know that Iran has been one of America's, how do I call it? They're called arch enemies. I think they're called rivals or arch enemies or threats, right? Now, the fact that the leader of the IRGC was already eliminated initially when the war was starting, it puts America a little bit on the safe side. They don't really have any major interests because it will take a lot of effort for Iran to move all the way from the Middle East to the US to cause chaos. So that the mere fact that that has been taken out of the way, it reboosts the confidence in American investors. So initially you expect the dollar to start recovering. But at the same time, the bombs that we are seeing, all the way we are seeing is strictly within the Middle East. And as we had been seeing during the negotiations, the Americans already moving their assets from their bases, their major assets, So they don't really have any major assets that are at risk at the moment yet, or that have been targeted yet, right? Any major assets that could affect the markets. That means the US is on a safe side of the markets. So what will investors do? Since Europe is already unhealthy to invest in because our oil supply has been reduced to Europe, then most definitely the investors are still looking for a bit of venture that can give them more money, more of like a risk-on sentiment, still on. They haven't yet gone risk off. Why? Because they have an option of investing in the US dollar bonds, because the US is not yet at a straight risk of Iran yet. And one of their biggest allies has already been taken out of there, who was the leader of the IRGC or the Ayatollah. So that means investors will still be able to invest in the dollar index. That's why we have seen this sharp rise in the dollar index ever since the war started. We have seen it just going to the upside. That means the dollar index is acting as a safe haven at the moment, because not being at any major risk of the war as well. So we saw the dollar index break above our previous resistance. This is a strong level here that had held price previously, but due to the war, you can see the gap up that opened the week and price is pushing to the upside. We had one day trying to push down, but then the dollar of course started recovering, and we are seeing it trying to aim to go higher than that. So we are still bullish on the dollar index. We can go down to the 4-hour time frame. We see what's going on. So we are seeing today we have non-farm payrolls, of course. Yesterday we saw the price come back down into a demand level, into its demand level, and start pushing to the upside, right? Right now what we're looking for is a liquidity injection. I think that's how ISD guys call it. They call it a liquidity injection. That comes in during the news, that spike. If the news comes and favors the dollar, we shall see this continue to the upside, because definitely we want price to come and take out this high, because we are seeing a bullish structure on our 4-hour time frame. So a positive news figure in today's NY session or New York session about 4:30. You will definitely be looking to look for buying opportunities or scaling buying opportunities to push us above this, right? Now, just in case the figure comes out and it looks a little bit negative or a little bit below 58K, which I highly doubt is going to be the case. I highly doubt that will be the case. Then when I look at this zone, there's a way to approach this. When I look at my demand zone here, it's a whole zone for me. I'm going to mark out the 50% or the midpoint of this up level here. I'm going to mark out the midpoint of it. Let me take away my fib to just have a cleaner chart. Then now you can get rid of, okay, I want to get rid of the fib tool. So get rid of the fib tool. In case the figure comes below 58K, you can see a slight push down here. I expect this area to still hold, but I want price to come into this 50% level, right? Where I can see a 4-hour demand. So we can refine this to this like this, right? In case the figure comes out below 58K, sorry, we can see a push down here, then a push higher. But I highly doubt that's the case. I'm still very, very bullish on the dollar index. As long as the war is still on, I'm bullish on it until we see any major interest of the US get attacked. So now that's the dollar index. So let's move in to someone here says Euro USD. That's Lucy Wangechi. Thanks for tuning in, Lucy. Thanks, of course, to guys and Robert Cavalli as well. Thanks for tuning in, Irene. I appreciate. Thanks for tuning in, the guys on Instagram once again. I can see Boniface Okoth, Ben Soho from Komikwa, Larry Ladd, Veronica Waitutu, Kadi and Bithea. All these, thanks for tuning in as well, guys. So now here we expect the dollar to be a bit strong through the day. And of course, if the figure comes out positive for the dollar, we shall look for buying opportunities on dollar-related pairs. Now, some of those pairs will be, of course, GBPUSD, sorry. This was some analysis we did have together with the 10 a.m. class yesterday. For the guys that were in for that class, we did speak about pushing to this area here. Price tapped into our supply level, gave us these nice sells, as you can see them. Very beautiful sells, before giving us a correction later in the day. So now, coming into this price action, let's go to the 4-hour time frame and see. We are seeing the pound try to come into a recovery mode. Later on in the day and today's morning session, the pound has tried to come into a bit of recovery. But you can see that up here we still have a supply level that's holding price, and then we have multiple rejections that happened right under this supply level. Now this is our supply level, and you can notice there are multiple rejections that happened around this area, meaning we can easily tend to have a strong resistance around this area. So for as long as we are around or below this resistance level, I'll be looking for lower time frames are definitely giving me bearish confirmation. So I'll go to a 30-minute time frame because that will become a 4-hour resistance level. And then from here, I'm going to look to see what I need for price to go lower. So you can try to refine this zone here and just see what 2 areas we can be able to pay attention to. So we have this first area here. We can refine it to this. Price isn't quite tapped into it. We had a small slight inch towards that area there, but price didn't quite hold on to that area there. So you can expect price to, worst case scenario, if you get a manipulation or what they call a liquidity sweep into this area, then sell to the downside. That aside, what happens if the volatility or the dollar becomes strong based on where the current market currently is, right? We can see a support level here. Now this is called conditional directional bias. We're seeing a nice support level down, which means that if price, since our bias is already bearish, if price breaks below the support level, then we can start looking for selling opportunities to push GBPUSD to the downside, which will actually be aligning with our analysis on that, with our analysis on the dollar index. Because if you expect the dollar to be strong through the day, then we most definitely expect GBPUSD to sell through the day. Now that's something that we want to pay so much attention to. If we break below the support level, we are going to look for those selling opportunities to the downside. But I still expect price can come into this zone here because the area is still fresh or still unmitigated. Then we can be able to push to the downside as well. So that's how basically we can approach this particular scenario here. The GBPUSD are trying to correlate this with the dollar index perspective, right? The dollar index perspective. So now that's GBPUSD. I saw a request for EURUSD somewhere in between. So since it's a dollar-related pair, let's move into EURUSD over here. So this is still our analysis from yesterday on EURUSD, but we did this with a 10 a.m. class and we're analyzing these dollar-related pairs as well with the same perspective. And what we could see here is that we had a supply level here. The price came in and gave us this beautiful push in, then a push to the downside. I think most people call these sniper entries. They call it sniper entries. Now we had 2 perspectives of price either coming down here then buying, or coming above this area first then selling. And what was beautiful yesterday is because we had 2 trades. We had the buy from this zone, then we had the sell from that zone. So there's an amazing day in office yesterday. So let's move in and just look at what we can expect through today's analysis. So I'm going to just come from the 4-hour time frame, and as you can see once again, all signs or all roads on EURUSD lead to the downside or to bears on EURUSD. So we can look at the we had the same kind of area here, multiple rejections. Yeah, you can see this. And one of the patterns you want to pay attention to, I don't know if I have a curving tool around this. Let's see objects. Let's see this. Okay, we don't really have that, but anyway, we can see this kind of area here. There's a price is trying to draw like a round from like a dome, like a dome. Sometimes the market does that to accumulate orders to go to a specific direction. So it's like a round move to the downside. And what we'll be anticipating or looking out for is for price to come and take out these previous lows on EURUSD. So of course, what would be able to push us here much more easily will be if the non-farm payrolls or the NFP figures come out and they are above 58K. Now, if they're above 58K, which is the forecast, it's good for the dollar. If they're above 130K, which is the previous one, right? Which is the previous figure, then it's too good for the dollar. You expect some long-term sales. When it's above 58K and between 130K, it means the economy slowed down a little bit, but they're still above the forecast. But it means the economy slowed down a little bit, but that will be the forecast. So you can expect some dollar strength, then some bit of correction moves. But if by any case scenario we get anything above 130K, let's just say the economy surprises us in the US and it comes above 130K, then we are looking at some long-term dollar strength. Given the fact of what's happening in the Middle East, favoring the dollar, then we get a figure above 130K, then we are in for a very long bull run on the bull run on the dollar index, particularly the dollar index, right? That means you shall be looking for sales on EURUSD, GBPUSD, AUDUSD, NZDUSD, those pairs that are inversely correlated to the dollar. So that's USD, EURUSD, sorry, we are still looking at the same thing. So you're seeing this area here, price rejected a couple of times, pushed lower, right? Let's go to our 30-minute and see what we shall need to see happening, or what areas you can pay attention to in order to get some bearish opportunities or some trade opportunities through the day. So from here, you can see price came back up, had this zone here, but already had this correction move to mitigate that zone there, right? You can draw that supply level there that pushed price there. So you can draw this supply level over here, and you can see price already came into it and it's pushing lower. It has failed to break below this level here, but that's quite okay. We are seeing some bit of a correction move to the upside. So I'm going to borrow the 15-minute time frame because it may give me a much better structure. So you can see that 15-minute time frame. We have had a breakout from here, and price is giving me a correction. So I'm going to pay more attention to getting a confirmation when price gets into this most recent supply level. So I'll wait for a 5-minute confirmation. Now these confirmations tend to vary. And I always tell guys, with these confirmations, you can look at things like on pairs like EURUSD and GBPUSD. You can even look at candlestick patterns in most cases, because they tend to not be that very volatile, and they don't move as fast as some other pairs move, right? So personally, I like doing what they call chart pattern confirmations. That means I'm going to see price get into that area and give me a shift pattern, or what ICT guys call a smart money reversal. But when I come to pairs like EURUSD, these pairs require a lot of patience. And personally, me, I don't like this. So I'll be trading gold, because I know gold will come in and give me my chart pattern confirmation in the next 15-20 minutes. I'm patient waiting for that. When it comes to EURUSD, I can come to my 5-minute to wait for a chart pattern confirmation, and it can take me 2 hours to form. So that's a bit it can grow on me in most cases. So for EURUSD, I always tell people you can have at least 3 versions of confirmations you can use, besides waiting for, let's say, chart pattern confirmations, or those complicated confirmations that take a bit of time to form. That's how with EURUSD, we can expect something like that. So we're still looking at bears to push the downside. And of course, we'll be targeting like this demand level down here for today's price action, or through today's price action. And I expect if the news comes out positive for the dollar, we shall see that push to this area here. If it comes out negative, we still have this zone above here. It's still a strong resistance level. We're going to just refine it to these weak rejections here. Why I'm refining to this level here is because of the number of rejections we are having there, right? Now here I'm just reading a price action. You see the number of rejections showing that, you know what, whatever is happening in this area, it has a lot of potential for sellers. Now, worst case scenario is that the news comes out and the figures are very unfavorable for the dollar. Then you can say I'll push all the way to this area here, where you can still look for selling opportunities based off what we are seeing happening on the left-hand side. It's giving us precedent of what the market's actually always telling you a story. The market will always tell you a story, right? The rejections, the engulfing patterns, the momentum, they're always telling you a story. So you need to align your analysis with a story that the market is trying to tell, say to you. I know when you think of it, sometimes it may feel a bit, how do I call it, like delusional. Like, oh, the market looks like it's speaking to you or something, but you have to try to develop that kind of mindset. Just to some extent, right? This price action should speak to you one way or the other. So that's EURUSD, and then GBPUSD. We have looked at those two. Let's move in and look at USDJPY from Gaizi Alexandria. It says USDJPY. Now, one thing about USDJPY is that many people don't pay so much attention to it, but it's one of those, how do I call it? I wouldn't say very good pairs. It's a good pair, true, but I'm looking for a different language to use. It's one of those amazing pairs. It's one of those amazing pairs that it's a better language. Very underlooked, yet it has so much potential to make you some good money. A low peak value, beautiful market structures, good volatility. So it's a pair, if you've been underlooking it over this weekend, first sit back and, first go through it and see if its structures make sense to you, because it's a very amazing pair to trade. So let's look at this. Now, this is the 4-hour time frame on the US dollar and Japanese yen, right? And like, look at this. Look at the price action on this. It's just beautiful, right? There is no way you cannot. I'm trying to use how do I call it? Restrictive language. But I'm going to just say, there's no way you cannot fail to fall in love with a pair that gives this kind of market structure. Like, if you're not seeing higher highs and higher lows, I don't know what else you're seeing, but all I'm seeing is higher highs and higher lows. That means with, as you know, it is the candlestick Bible. This is an amazing pair, right? Higher highs, higher lows, higher highs, higher lows. Look at this, higher highs, higher lows, higher highs, higher lows. Our resistance, support, bullish engulfing buy, price going up, almost to the previous higher high. Look at the previous scenario, higher highs, higher lows, a resistance, turns support, price comes back, gives you a rejection candle, you have a buy. The bullish engulfing wasn't so beautiful, but later on it comes and gives you another bullish engulfing, you have a buy to the upside. Easily, you have 2 trades out of theory, worst case scenario, right? Worst case scenario, you have 2 trades out of theory in this case scenario, but you see how beautiful this price action is. On a 4-hour time frame, as a intraday trader, we come and look at where this trade shifts from down over here. We have a consolidation, right? A breakout. This was a resistance. You can tell price was behaving with this. Let's mark out all our wicks. Remember, I mark my zones by all their wicks. I mark them out by all their wicks. They are nice. We have a very nice resistance level. Price breaks above it. Resistance becomes support, right? We have our trend line, right? 1, 2. The touch is there at our resistance level. You have the buy to the upside. So regardless of what you're trading, this is very amazing price action. So as I said, there is no way you cannot fail to fall in love with a pair like EURUSD, like USDJPY. So that's why I said it's an amazing pair with very beautiful price action. And I think you guys have seen an example of how it moves. So anyway, let's get down and see where we can expect our price to move on USDJPY. So as we said earlier on, we expect the dollar to be a bit strong. Somewhere in between, we have seen the JPY act as a safe haven currency. That happened about 2-3 weeks ago when we saw this happening. This sell to the downside, right? Ironically, this is when we began the talks between Iran and the USA, right? Now, because the talks were still fresh and there wasn't really any, how would I call it, any major risks yet at that war, investors were trying to play safe by investing more in the JPY, right? So we saw this happening, right? Then after he scheduled the 3rd meeting, that was early last week, early last week, we saw, it was I think last week but one, we saw the Japanese yen again becoming a safe haven to investors. It's only until the war starts that investors now turn to the dollar to become a safe haven currency, other than the JPY. Of course, there are some who may still invest in the JPY index, but we had now negative figures coming out from the Japanese yen a week prior to the war. That now made it very unfavorable for investors to want to run back to it, right? That made it very unfavorable for investors to want to run back to the yen or to the Japanese yen, right? As a safe haven currency. So until those figures stabilize, or the economy stabilizes with better figures, investors will stick more to the dollar index or to the dollar as the safe haven currency. So let's look at this. We have a resistance being formed. We have our trend line beautifully forming over here. We had our previous breakout over here as well. We had a correction that came in, didn't quite get to our demand level, which means this demand level is still fresh, right? And someone may worry and say the demand is below the trend line. Very, very okay. I usually we take confluences, right? Both these two things. For me, demand can still be support. I don't know about your concepts, but demand can still be support, right? So when you speak about confluencing, this is a support level that is slanting. This is a support level that some people prefer to call demand levels. So as long as price is above these two zones, like both of them, you're bullish. For price to go bearish, it has to break below this trend line, then break below the demand, then you can be bearish. But anyway, look at what's happening right now. We are seeing the resistance trying to push price lower. When I go to a 30-minute, I'm going to look for the most recent demand levels that price have formed on a 30-minute time frame. Remember, as long as price is above these levels, we are pretty bullish. So we want to see, we have a support level also in here, intraday time frames now. We're now in intraday. We have this level here. If price breaks below this, we expect it to push lower, at least until, let me see, do we have a good level here? I have a good level here that I want to mark out. I just need to get the right tools to mark it out. I'm trying to decongest the chart. We have that line there. So we can expect price to push down until this level here, then buy to the upside, right? Push until that level. Let's look at the risk that would be on this level here in terms of pips. Quite a lot of pips, but not so bad. They are manageable. So you can have that level there. You can even have it refined all the way to the left-hand side to something of around this. So you can have this, and look at this level here. It aligns perfectly with the trend line. So I think it would be a nicer way. Of course, refining sometimes may mean that you're going to miss out on trades, but as long as price gets to the area of interest and you look for a confirmation pattern, you never get worried about that. But anything besides that, this is only if price breaks this support level that we are seeing here in a 30-minute time frame. Now the question is, what happens if it doesn't break below it? We're looking for buys and price is currently inside an area of interest. That means on my 5-minute time frame right now, I'm practically just waiting for a confirmation to buy USDJPY, sorry. I'm practically just waiting for a confirmation, which, as I told you, on pairs like this that have some good volatility, it's going to be a shift pattern. So I'm going to mark out the previous high that was formed, which was this. Price hasn't closed above it, but what I'm looking for is a candlestick closure above this. Then I'll retest where I'll take my buy and then push the price to the upside. This is as simple as it is, and you realize the risk on this pair is very little, yet your trade will have breathing space. You see that? Only about 10 pips, but your pair has breathing space at the end of the day. So it's all I'm waiting for on a 5-minute time frame, then definitely target this area here. Even if I'm bullish, I'll still wait for price to see if it can break above that resistance up there on the 4-hour time frame that USDJPY had formed most recently. So that's a USDJPY, and what I'm looking out for, I'm seeing prices pushing nicely to that direction. I think my coffee has cooled down. It's okay. All right, so that's USDJPY as requested for from Lukaizi Xavier. Thanks for your contribution and for the interaction. So we have something from Birunji, and she says BTC USD. She says I will analyze BTC USD. So guys, both on YouTube and Instagram, don't forget to like. You can just be pressing like a like small. You be pressing tapping like a like thing, like a heart icon, like a 100 icon, slowly. And it helps the like move and reach more people. And as well, we can grow the community and grow together as well, and try to see how best we can be able to make money from these financial markets. Of course, as we move on to Bitcoin or BTC USD, BTC has been one of the trickiest pairs in the past 1 year or so. Basically, because of the way it has been moving and the factors that have been influencing it. Now, this is Bitcoin on a 4-hour time, on an hour time frame, and the 4-hour time frame. On a 4-hour time frame. So this 4-hour time frame is tricky because it has been following very beautiful price action, and we are back to the 70K levels. But that has to first pay attention to the high time frames on Bitcoin. Very important, right? Right now, this reaction is coming from a weekly zone. As you can see on the left-hand side, the reactions are coming from a weekly zone, which is a good sign, right? It's a good sign because we expect the weekly zones to have high levels of liquidity. That means that when price gets to them, order pairing happens, and price can get order or good momentum to push to the upside. So if we've got lower time frames and are able to confirm the buys that are happening within this weekly zone, that means we can target the weekly zone up here, right? From a weekly zone to a weekly zone. But you see the problem? This is a weekly time frame. We can't really take trades or wait for all these weeks to get a good confirmation. But this is just to give us a picture of what's happening. So let's go down to a daily time frame and we see what was occurring, what was going on the daily time frame. So price comes into this weekly zone. We'll be able to refine this to our daily zone over there. Price came tapped in very amazingly, or with a very nice, beautiful price action. But after tapping into this, we saw price get into an accumulation. And I think when you have market snapshot, this Monday, we did this, and I openly told you guys I'm not looking at a price doing anything until we break out of this consolidation, right? We had some bit of consolidation happening around here. Let me draw it this way and to get the right zones. I'm going to start from under this level. Why? Because after price breaks below is when it becomes a strong resistance. After price breaks below this level is when it becomes a strong resistance. So right now, what do we see? Price has given us a breakout. Now that is a beautiful sign that now we can start looking for opportunities on Bitcoin. I think for the past 2 weeks, I've told you guys that I'm not looking for anything with Bitcoin because of this whole kind of price action that was going on here, right? Because of the kind of price action that was going on right around that zone there. So now that we have a breakout, we can now look for opportunities or see what areas could definitely offer us some buy opportunities. So we can see a 4-hour time frame. It was moving slightly to the downside, kind of like in a sloping downtrend, as you can see. But all of a sudden, what do we see? It has now changed the movement. We're instead going to the upside with nice, beautiful structures. You can see these kinds of structures being formed. Price just forming a nice, beautiful series of higher highs and higher lows, and they are currently forming out nicely. So when you look at this, we can have this on that side, move it a little bit to this way. We can have that, and you see how beautifully price is pushing to the upside. So coming back down, we are still currently in a retracement, and we can refine this to this demand zone on our 4-hour time frame. That means currently price is in a lower time frame correction move. When I say lower time frame, it's not the main trend of the market, it's just a 30-minute time frame that I expect to see in a small downtrend. Basically, because the 4-hour is in an uptrend, but currently it's experiencing a correction or a retracement, right? So seeing that, I would like price to come to my demand zone, but I can only see that on my 30-minute time frame. So then we come to our 30-minute time frame, and the question is, what do we see happening on our 30-minute time frame? So you can see a nice, beautiful price channel forming here in regards to a price pushing lower. So once again, I love having two zones to take my trades from, just in case liquidity is never enough. I will get the best zone you want to get to. So we have this zone down here. You can just refine it to that. Then now we have a level. This is a demand level. Price hasn't gotten to it. Now I'll get rid of this other one here to reduce that noise. Okay. To reduce the noise on our chart. So we have two demand levels. These are going to give us our first buyers ideas. Buy from this zone here. Upon a 5-minute confirmation, very important. Buy from here as well. Upon a 5-minute confirmation. Now those are the areas of interest where we shall be looking for to get confirmations. The question is, what if price doesn't get to them, and let's say Bitcoin gets some reason to push it higher. Remember, Bitcoin doesn't really move based on what's happening to the dollar, so it can buy while the dollar is not buying. Very possible. When I draw this across, you can see we have some kind of SNR level. When I say SNR, I mean support and resistance. You can have that SNR level over there. Another way price can be able to buy is if we break above this zone here, push back into a correction, and then continue pushing to the upside. That's a perspective you want to look out for in regards to BTC USD, and it's a very interesting pair to look at because it's a crypto, right? It's not a currency pair, it's a crypto instrument. So that's why you can tend to see a difference in correlation between the dollar pair. Same thing happens with gold. We'll have scenarios where gold will buy and the dollar will also be bullish. So this is what I'm looking out for in regards to BTC USD. So that's GBPUSD. Look easy. We already looked at that. I believe you were able to get that analysis on GBPUSD. Jamada Yahaya, hello, how are you doing? How are you doing? Irene Miner says, I learned from you how to analyze markets and identify FBJs. Now I pay my bills with Forex money. Thanks so much. You're very much welcome. I hope you keep winning, and I hope you make even more money. And every single day, we shall keep doing our best to help you guys. Do what? Become even better traders. The goal is for everyone here to be able to win and eat with us. And don't forget to invite a friend or a friend or a friend or a family member and everyone else you can bring. And we are very open to helping everyone achieve the same goal. Irene, thanks very much for the feedback. I appreciate that. And may God bless you for giving us that feedback. Quintus Arthur or Trent, how are you doing? How are the markets this week? Were you part of the Ugandan trend, whereby we came out of the weekend expecting everyone wanted to buy gold, Oh, and I mentioned earlier that I'm going to tell you the trick behind that. But just like last year, by the way, like sometimes they say once bitten, twice shy, right? So last year we had a 12-year war, a 12-day war, sorry, not 12 years, 12-day war between Iran and Israel, right? And trust me, for those 12 days, gold didn't buy. Gold did not buy. Now, I was a victim then, because last year I was only buying gold. And I thought the war would actually be able to push gold to the upside. So what happened is that I was looking for only buys, and I lost out so badly. But that prompted me to go into deeper research and find out. We have been told that during geopolitical tension, gold actually buys. But last year when Iran and Israel were having that whole conflict, for 12 days, gold only sold, right? So this when I go down and do some research and find out why did this happen. And in my research, I realized that when you look at things like the Middle East, you have to pay attention to who loses the most, who are the winners and the losers, right? Is there anything that's going to be put at risk that will force investors to actually run to a safe haven like gold? And when they run to a safe haven like gold, it basically means investors have gone to what we call a risk of sentiment. Now, during that war, what's going to push investors to go to risk off? Because on gold, they're basically just holding their money in the same place. It's not like they're going to make out of money from gold. It's not by default, right? Because gold can lose value. But in that case scenario, there are other currencies that can actually offer them a good yield. Remember when they're buying these bonds, all these yields, all these currencies, they're going by what they call a yield, right? Now, in that case scenario, if that was not affecting the dollar, why would an investor invest more in that dollar? Because they will get more money from buying American bonds. Yes, they will take a bit of time because someone will buy a 2-year bond, 10-year bond, but they will make more money at the end of the day because what they call a yield, the yield curve, right? The yield makes that currency much more profitable for the investor. So if the US, for example, doesn't have any major interests of it in the Middle East in harm's way during that war there is no reason for investors to run and buy gold because gold just holds value, right? Yes, it appreciates, but it can also depreciate. Sorry, we saw 2022 gold going down to as far as 1,400 from 2006. So 1,700 in 2022. That's the low I think it hit 1,700 and something, but it came from 2,060 all the way to 1,000 in 1 year. Now, if they kept buying gold in that year, that means they would have lost value a lot. So investors rather come and invest in the US dollar currency because they'll have bigger yield on it other than running to gold. They have no reason to not invest in the dollar right now. But they're getting their money out of the pound, out of the euro, out of the Swiss franc, and investing in the dollar index, for example, because they have a better yield. Now, when it comes to this, and then we look at USD card right now, USD card is in a bit of a consolidation. Why? The dollar is being invested in, and so is the Canadian dollar as well, right? Because no one is going to tamper with Canada. It's not being affected by the war in one way or the other. All their prime minister does is sit down and say, oh, we stand with so and so, we're helping so and so, we are free, and NATO should do this. That's all they are doing in regards to the war. So there's a bit of a mixture in between this, right? So you're seeing we have periods where the card becomes strong, the dollar becomes strong, because the investors are getting a fair balance between the two. But looking at intraday perspective, we had the most recent breakout over here, which I'm not so comfortable saying I want to buy US. I'm not so comfortable saying I want to first buy initially by default because we want to wait for the non-farm payrolls to come in. But we have very beautiful buying zones on USD card. We have very beautiful buying zones. The market structure here is so beautiful. You see a breakout, you see a nice, beautiful correction. These are signs of a correction, right? And then we have two nice demand levels on the 30-minute time frame. We have this demand level here. From our 10 a.m. class, we call this a type 1 demand level. It's a high probability demand level. But even being high probability means you need to take confirmation. Then we have the type 2 right below this. Now, these types, you learn them in our 10 a.m. class and our physical classes for the guys who are in Uganda or in Kampala, particularly, right? Yeah, it will make no sense someone coming from another Uganda every day for classes. The bus alone takes about 8 hours to reach here. So yeah, the guys who are in Kampala, we talk about this in our classes. The guys in the 10 a.m. Zoom class, we speak about this as well. So right now, I see price is inside my demand level, which is a nice sign. Now I want to see what shift pattern am I going to get on USD card. We are seeing price is giving us the lowest point. Now we need to look for the high that creates that low there, right? This is the high. So on this high, I'll get a breakout, I'll get the correction move, and then I'll get a push to the upside, right? So that's what I'm looking at in USD card and what I'm expecting. Push up, correction, buy to the upside. I saw a request for USD card. Though this person here, Ghost search with AM, you put card USD. That's the other way around, my brother. It's the other way around, eh? It's the other way around, yeah. So other than that, I think in the interest of time, and with the interest of time, this is where we're going to end. We call it a day. I wish you guys all the best. But don't worry, towards NFP we have something. So guys, at 3 p.m., make sure you're on our TikTok. We're going to do some fine analysis. towards the non-farm payrolls. Of course, shall some analysis how the pairs are moved out. Shall look at the same analysis, how it's playing out, and see where you can look for some opportunities, and shall do a whole market wrap up of the week in our 3 p.m. TikTok session. So FXPesa TikTok, 3 p.m. Make sure you're on it. Don't forget to subscribe to the classes we are having. Don't forget to share it with different people. Guys, we need to build a community around East Africa, right? So as many people as you can invite, bring them along. We are happy to have all of you around. Other than that, we meet next Monday, 11 a.m., same place, YouTube, and see what is there with the markets. Other than that, I wish you guys an amazing weekend, a beautiful weekend. Guys, we're in the Middle East, stay safe. We're praying for you guys so that everything can go well. Guys, we're fasting. We're praying for you as well, so that you achieve everything you're fasting for and have a happy fast as well. Other than that, yeah, tuonane wiki mpya. I'm working on my side kidogo. All right, cheers, guys.